everybody, and welcome to our session, How to Structure Risk-Mitigated Long-Term Portfolios, Accommodating Large Enterprise Timescales and Delivery Schedules. I will break down in a second what that complicated title really means, but let me briefly introduce myself and CESA. So I'm Carla. I'm Chief Impact Officer at CESA, and CESA is a leading provider in the voluntary carbon market, and we help our customers, predominantly large enterprises, to design, procure, and manage science-backed carbon credit portfolios. We support our customers across their entire value chain, from defining the portfolio goal over the implementation and all the way down to procurement, fulfillment, and management. And we also support our buyers to understand and mitigate portfolio risk, which is especially important for long-term offtakes. So what are long-term offtakes? Very broadly, they are a commitment or a transaction between the buyer and the seller to transact carbon credits over multiple delivery and payment milestones over an extended period of time. And we see an increasing demand and increasing traction for LTOs, yet to date they are not mainstream in the voluntary carbon market. And this is partly because buyers perceive them as extremely complex. But on the other hand, they are a very strategic tool to achieve net zero targets. So why are they a strategic tool? So companies have their net zero targets within reach. Currently, we have more than 5,000 companies with a committed or validated net zero target. And they need strategies to ensure the neutralization of their residual emissions at net zero. This, together with an anticipated regulatory change in the future, increases demand, which in turn is reflected in a projected shortage of supply by 2030 latest. So buyers engage in long-term offtake agreements to avoid a shortfall of carbon credits, to account for their residual emissions at net zero, but also in the light of the currently open public consultation of the Science Based Targets initiative for taking responsibility of their ongoing emissions. And this is important to understand because this increased demand is expected to also increase prices in the market. And the buyers we are working with use LTOs to secure access to high quality carbon removal credits, while at the same time locking in favorable prices. Based on our data, buyers can save up to 30% when engaging in long-term offtake agreements as opposed to spot purchases. On the flip side, LTOs also come with increased risk and also challenges given the dynamic market environment. CESA supports its buyers to identify the risks relating to host country risk, delivery risk, quality risk, and pricing risk. And it helps mitigate the risk for our customers. Of course, all of this is only possible with a robust network of partners who I am happy to introduce today and who will help to demystify some of the challenges and aspects of long-term offtakes. So please welcome with me Kate Roger, Head of Business Development at Isometric. She's helping to integrate high-quality carbon removal credits into climate strategies, and she advocates for transparency and scientific rigor. She has a history in climate tech, especially climate risk, as she was working for Service and Mitiga before joining Isometric. Welcome, Kate.
Thank you very much for having me.
Absolutely. We also have Kurt Suo on the call. He is Chief Business Officer at Varaha, and he's working on procuring long-term offtakes. Previously, Kurt was a co-founder of Graphite, a biomass-based CDR company, and he has over 10 years of experience in agtech startups. And finally, we have Andrea Bonsani on the call, International Policy Director at the International Emissions Trading Association, short IETA. He works there since 2021, and he is leading on activities on Article 6 and international carbon markets. Prior to IETA, Andrea worked at EDF Trading in London, Equinor in Brussels, and the United Nations Economic Commission for Europe in Geneva. Welcome. Great. So without further ado, let's jump into it. Kurt, I would like to start with you. Can you give us a very brief introduction into what Viraha does?
Yeah, so thank you, Carla. Very happy to be here today. Viraha is currently the largest carbon removal project developer in Asia, right? So we sit on the supply side, and most of our company is based out of India. We're founded out of India. And what is unique to us is that we work with smallholder farmers in India, but also in neighboring countries and smallholder economies on carbon removal projects. So they really are at the center of the projects that we develop, close to 20 projects now. And this happens across 4 different pathways. So we started in regenerative agriculture, building soil carbon, and then we added agroforestry and afforestation projects as well. Most recently, and I think what we're best known for are actually the biochar projects. So we're going to talk a little bit more about that because we have a long-term offtake with our industrial biochar using an invasive species that Google partnered with us to run the offtake there. And then we also run enhanced rock weathering projects in India on cotton farms. So we work across, we call those our different pathways, our 4 different pathways for removing carbon and sequestering it. And a few things we've loved our collaboration and working with Caesar. I think we've been able to sign large contracts, both spot and long-term offtakes with customers like Google that I already mentioned, Capgemini, Vodafone, Mirova, Deloitte, Swiss Re, Lufthansa. So the list is long, and we're very fortunate to be working with all of those buyers. And importantly, we also believe we're one of the few carbon removal suppliers to be profitable. So we reached profitability in this past financial year. And offtakes are an important part of that as well. So happy to talk about all of those things in more detail.
Great, thank you very, very much. And I think what is especially interesting, and what I think we would like to from here as well, is also in the not this question, but the question after, what are the challenges and opportunities with respect to certain pathways of yours, right? I think there are certain standards that are eligible that might come with different kind of certification timelines, different also kind of implementation costs and timelines that are associated with developing different projects under different pathways. But maybe before we look into that, I would like on a higher level just to understand, where do you think, and you highlighted it a little bit, but maybe jumping in, what are the opportunities for suppliers and the market kind of more holistically when buyers engage in long-term offtake? So what is the impact they can really create?
Yeah, so I want to talk about 2 things. One is driving down the cost of capital, which today is still a pretty significant contributor to the final cost of a credit. And second is just helping to create more supply of high quality carbon removal credits specifically, right? So on the cost of capital side, this is really simple, just to use like very real numbers here. If we are raising capital for a project and it comes from Viraha's own balance sheet, today we're VC supported, right? So the IRR there would need to be 30, 40, maybe even 50%, right? If that's the source of project equity. If we want to diversify our capital stack more, the next in line would be hedge funds, right? And they're charging in the 20% plus range or in the high teens in terms of returns. But then if we could actually reduce price risk, then we can move into through long-term offtake agreements, then we can actually lower the cost of capital there into, let's say, the mid-teens, right? And then over time, we can maybe even get into single-digit returns. So that kind of evolution from funding projects with your own balance sheet equity all the way to a de-risked debt provider is really where long-term offtakes are are allowing suppliers and project developers like Varaha to gain some traction as we move down that curve, right? So that is for us by far the biggest opportunity. And then, I had also mentioned just bringing in more supply of high quality carbon removal, right? I mean, I think right now, we don't have enough high quality supply. In order to generate that in the future, we're going to need to invest now, right? And so offtake is the bridge that allows us to invest in credits today. You had asked about pathway specific kind of details, right? And so if you plant a tree today, that's one of our pathways, then that may not generate credits until 5 years from now. It's a little bit faster for soil carbon and enhanced rock weathering projects. And then for biochar, maybe somewhere in the middle, right? Because we would still need to go build a plant and then be able to generate credits through biochar and gasification of biomass. So these all have certain lead times, and so those who are waiting to buy spot credits, not only are they going to have, as you mentioned, 30 to 40% higher price because they're paying for cost of capital that other investors put in years before, there's also just not going to be enough supply, right? And so in the high quality space, incredibly supply constrained. So right now we're still in a pre-consolidation phase of the voluntary carbon markets. We have hundreds, north of 500 durable carbon removal suppliers who are out in the market right now. We think that number will be significantly smaller in the next 5 years, and so therefore it makes sense for buyers to really lock in the supply with the suppliers who will be around over that long term, and lock in their credits. That also has the knock-on effect of making credits more plentiful for the entire rest of the market.
Great, thank you very much. Now, having discussed the opportunities, what do you see are the main challenges, and how do they differ between different pathways?
Yeah, so really for us right now, there are two major challenges in signing long-term offtake agreements, and these are around delivery timelines and just having the availability of replacement credits in case of shortfalls, right? This is a major risk for a developer. So let me describe those in a little bit more detail. So around delivery timelines, one issue that we're running into right now is registries like Verra have been prone to some delays in terms of credit issuance, right? And for Varaha, that's affected us more on the nature-based pathways. So that would be the soil carbon and the ARR projects that we're running. And some of these issues are outside of the control of us as a supplier. So we really need to every time, I've just identified one reason that they have that delivery timelines have been pushed backward because of factors outside of our control. And as a result, then replacement credits really come into play here. And here the challenge is, can we provide a large and diversified enough portfolio as a supplier in order to meet these replacement credit requirements, right, in case of shortfalls. So that is, that's partially why we work across 4 different pathways. We also work in multiple countries to decrease country risk. We have projects in Nepal, we have projects in Bangladesh, and then in many different regions across India. And then, of course, working with Caesar is another, form of diversification, right? Because Caesar can construct more of a diversified portfolio for buyers that can cover some of that replacement risk. So those are the challenges we face today, and we're trying to set ourselves up to be very resilient to those. And most of that is, as I said, through diversification.
Great. Thank you very much, Kurt. I want to move over to Kate. So Kate, thank you. Would you briefly introduce Isometric before we jump into
Yeah,
the questions?
absolutely. Can you hear and see me just before I go off on a spiel? Fantastic. Okay. Yeah, want to echo the thanks to Caesar for having me join. So I lead the team at Isometric that works directly with buyers of carbon removal credits. So I think have quite a lot to say about how to structure and how we work with those buyers when they are thinking about long-term offtakes. So Isometric is the world's leading carbon removal registry. For those of you that don't know what a registry does, we develop protocols. So those are the scientific rules that suppliers like Varaha would have to follow to be able to get credits. And then we conduct the validation and verification of the suppliers' projects. So we'll be independently checking that suppliers have followed those rules, and then accurately quantifying how much carbon has been removed and how long for. And then we have the registry where once we've quantified how many tons have been removed, we then issue credits, and those credits, the supplier is able to deliver those credits to marketplaces and intermediaries like Caesar, or to buyers, and buyers can hold or retire those credits depending on their own climate commitments. Isometric, we're fairly new in the space. It's about 3 years old, and our mission is to restore trust in the carbon markets. So our role is to make sure that when a buyer purchases a credit, whether that is a spot credit or an offtake agreement for future credits, every credit truly represents 1 ton of CO2 removed. And then my team specifically, I know you introduced me as the head of business development. We work with the existing buyers in the market, but also new buyers and marketplaces to help everyone understand what's going on in the market, when to buy, how to buy, what to buy, and kind of help them with all of those factors that buyers have to consider in making that purchasing decision.
Great, thank you very much. For us, registries are kind of one of the major filters, right? So they have their, in many cases, or most of the cases, their own protocols, right? They have their science teams. So they are also kind of the gatekeepers for, let's say, baseline quality, right? Making sure that is really high quality.
Yeah.
What would you say is the real role in carbon crediting programs to also ensure that in over longer term periods? So what do you do to update your protocols aligned with science? How do you work with the suppliers to make sure they can deliver in time? So how do you address the different risks, maybe quality or delivery risk, and how do you ensure that over time?
Yeah, I think it's twofold. So we have both the work with the suppliers to help them understand what's in our existing protocols and any updates that we make to protocols. We want to make sure that those protocols reflect the best in class latest science, and we have a commitment to refreshing our protocols on a yearly basis. But on the buyer side, we also want to help the buyers, and that includes marketplaces as well, understand what goes into those protocols, what decisions be made, why buyers should care about them, and then what is the process of validation and validating and verifying the credits, so that they are confident that any future credit that they receive is high integrity and high quality. We also think about designing those protocols to make sure that they are aligned with emerging government methodologies. So if you're thinking about long-term offtakes and you're thinking about a future compliance market, you might be EU-based, thinking about CRCF. We want to make sure that our protocols not only meet those standards, but also exceed those. And then on the other side, we're working very, very closely with the international rule setters, players like ICVCM, the Integrity Council for the Voluntary Carbon Market. And also we, a couple of weeks ago, announced that we're also been approved under CORSIA. So we're recognized across markets. So different industries can use the credits, and we'll be able to use those credits in the future as well. So it's an active engagement of making sure that we're ensuring high quality now, but also guarantee that that quality is going to be continuous throughout the term of the offtake agreement.
Okay, and zooming in on, we heard from Kurt that there are some challenges with some of the registries. regarding delivery risk. So how do you ensure that you kind of stick to timelines, that you can issue the credits in time to deliver? And what are the challenges you see there also when working with the project developers?
Yeah. And thank you, Kurt, for kind of setting me up very nicely there. You did my job for me. So I think obviously it's our responsibility to have a huge focus on quality and transparency, but on-time delivery has become one of the most important topics for all players across the ecosystem. So whether that's the buyers or the suppliers, even we're getting a lot more inbounds and questions from project finances, because it impacts the investment and the credit risk of each project. So at Isometric, we're aiming to give all of those players predictability around issuance and ensuring that crediting processes don't become a bottleneck, which, as Kurt mentioned, they unfortunately have been a bottleneck. Sometimes the suppliers have done all the hard work, they've removed the CO2, but they're in this kind of holding pen, waiting for credits to be verified and issued, and that is not, in our eyes, that is not acceptable. So a big focus on speed. We consider ourselves to be the fastest registry in the market, and we've now been able to do monthly verifications across multiple pathways. But this assurance on crediting timelines and more frequent verification processes means that suppliers get money from buyers more frequently and have more guarantee of that cash flow process. And it might sound like a supplier benefit, but ultimately when there is more cash coming into the hands of the suppliers, they can invest that money into their operations and invest that money into scaling, which ultimately reduces the risk for the buyers as well. So we're seeing buyers care more about, can we do monthly verifications? Can you give us more assurance on when we're going to receive credits? And I think we're going to see that more when we're about to hit some interim climate targets, where buyers really need to start retiring credits because they have publicly stated climate commitments. The way that we've been successful in focusing on speed is leveraging tech. So we have a platform called Certify, which is a self-serve platform for suppliers to work with, where they can create PDDs, they can interact with our teams, so we can provide them feedback within the product. And then this platform is also a self-serve platform for the VVBs, the third-party auditors, so that they can just focus on making sure that they are ticking the box, following the protocol, and understanding actually what's happening. So that focus on tech has really scaled down that very long process for some of the legacy registries in the market.
Great, thank you very much. Maybe one quick follow-up question. Do you also see some differences between different pathways, and also how to work together with project developers, and what is your experience there?
Yeah, I mean, definitely on the speed side, kind of mentioned, there are pathways that we are unable to do monthly verifications. Things like reforestation, a tree grows at the speed that it grows at. But I still think assurance of when credit deliveries are going to come in is important. So at least we can guarantee an annual credit delivery, which is still not happening across other registries. But then some of the bikers pathways are really easy for us to do continuous monthly verifications. We've got one supplier, we've done it for a year and a half, and that's incredible for their buyers, and it's incredible because they're getting more money in their bank account.
Great, thank you very much, Kate. Andrea, going over to you. Same procedure, so quick introduction into AITA before we jump into the questions, please.
Yeah, hi. Thanks, Carla, for the invitation. I'm wondering if you can see me and hear me well, because I don't see myself in the screen with the three of you, but that's fine. So AITA, as you said, we are the International Emissions Trading Association. We are a trade association founded in 1999. So we're very old for such a nascent market as carbon. And we currently have about 330 members from a very diverse set of sectors and also different positions in the market. We have suppliers, we have some of the crediting programs, the verifiers, financial players, as well as some of the buyers. And since our foundation, we track policy developments very closely, and we promoted all types of carbon markets. So from emission trading systems to the voluntary market, carbon crediting markets, such as now the ones under Article 6 of the Paris Agreement. And we promoted an interoperability between these tradable carbon markets instruments. And we see carbon credits both for emission avoidance reductions as well as removals, and as a key instrument that should play a role in government responses to climate change. So I'm very happy to be here and discuss with you today.
Yeah, thank you very much for being here, Andrea. From kind of your perspective and your work, and you already mentioned some of them, but can you list the 2 to 3 most important regulatory aspects, or things that buyers have to keep in mind when engaging with the carbon market, but especially when looking into long-term offtake agreements?
Yeah, I would say the regulatory aspects and issues that buyers need to consider are not fundamentally different for carbon removals and long-term offtakes than the ones that buyers of other types of carbon credits should consider. First, the credibility of the standard and the crediting program issuing the credits is really important. I think fortunately over the few years the markets converged towards widely shared definition of quality or integrity. Kate mentioned the ICVCM, and they're certainly doing an excellent work at identifying the carbon crediting programs that meet sufficient quality bar, as well as the methodologies within each of these programs. There's also under the CORSIA scheme, the market for international aviations, there are eligible programs and methodologies. So these will provide buyers with some guidance into what is considered sufficiently credible by governments. The second aspect I would mention is to understand the use of the carbon credits that are purchased. For example, understand what is eligible under what scheme. And if the buyer is buying for voluntary purposes, it's very important now to understand the claims that are allowed in a specific jurisdiction. I guess everyone in this webinar is familiar with the backlash against carbon neutrality claims, against offsetting in general. There has been a lot of confusion, unfortunately, but I think even on this side, we are converging towards some clearer guidance for buyers. I think we are a bit behind compared to where we are on supply, but we are getting there. And Carla, you mentioned SBTi, the consultation. I think once that process is finalized, it will definitely help reduce some of this regulatory risk in the markets. And then I will mention a third aspect, and that this is relatively new. It's about the regulatory frameworks in the host country, the country where the project takes place. I think we come from the experience of the Kyoto Protocol, where the host country didn't really need to have much of a say into the projects that were going on in its jurisdiction. Yes, they had to approve the process, but it was a relatively consequence-free action. For them, it was just investment coming in. Now under the Paris Agreement, every country has a target, an NDC, and they're expected to contribute to the goals of the Paris Agreement. So host countries are much more wary of what goes on under these jurisdictions, and that has led to situations where projects have been delayed or halted because of the development of domestic regulations. And I think this issue will become much more important if buyers will be required to purchase credits with a corresponding adjustment. I think that would be absolutely necessary if credits are used for regulatory compliance purposes. I can see, for example, its use under the EU ETS, which is something that's being considered in the EU 2040 target. But for credits used towards voluntary targets, I think it's still an open discussion whether corresponding adjustment is needed or not. I think we all agree that a credit with a corresponding adjustment has a higher environmental value, if I can use that phrase, because it forces the host country to make additional contribution to meet its climate targets. But I think there's a risk of restricting supply because we cannot expect host countries to provide corresponding adjustments at scale when they have targets to meet. So then I think you asked me about specifically long-term portfolio. I think it's all this multiplied by a factor because the risk carries over time and it can be complex to predict policy changes over time. So I think it's a lot of risk and we need to de-risk all this if we want to scale the market.
That's actually a great segue to my next question, because exactly, so mitigating risk. We know that different countries are at very different levels in terms of kind of carbon market readiness, right? We work with buyers predominantly on putting together diverse portfolios, and diversity also translated into different regions. We are from Kurt also developing project in different regions. So for the supply side, and Kurt, also happy to hear your thought. I think it is a challenge to kind of consider or think about kind of getting a corresponding adjustment further down the line when knowing that there are certain regulations in a given country. But for buyers as well who want to engage in a 5 to 7 year portfolio, let's say, they need to understand, okay, maybe it's not a requirement right now, but actually what is the readiness if it becomes more important further down the line? So what is your advice here, and what is the best way to mitigate risk in this area?
Yeah, I believe at this stage, countries are still on a journey, even the more advanced ones, and even countries in the global north haven't fully finalized their regulatory frameworks and their policies around the authorization of projects and just more broadly regulations around carbon markets. I think there are some indicators to watch. The finalization of a carbon market legislation or some regulatory instruments that regulate carbon markets that assign responsibility to specific ministries or government bodies. But I think it's very important to look at the domestic politics of the country as well, to sort of strengthen the understanding of the policy instruments, the likelihood of changes down the line, and just generally the attitude of the decision makers in the countries towards the role of carbon markets under their jurisdictions, whether they're keen to incentivize investment in carbon removals or less keen, and whether they're likely or not to provide a corresponding adjustment if a corresponding adjustment is required. Or as you said, Carla, it might not be required now, but it's certainly something that can add to the value of the projects if the likelihood of obtaining it is higher.
Thank you very much, Andrea. Maybe Kurt, over to you. So how do you experience working with different host countries, and how do you assess, or what role does it play to assess carbon market readiness, or even kind of receiving an LOA in a specific host country?
Yeah, so I'm definitely not the expert in the more like technical aspects of corresponding adjustments and where that stands today, country by country, or in the bilateral sense either. What I can say is related to this topic, what we pay attention to are just the development of compliance carbon markets, right, in different jurisdictions outside of India. And One example is we've seen a lot of interest from like Japanese corporates and trading houses, because now there's a bilateral agreement with the JCM, which is Japan's credit market, and India, right? So those are factors that we're starting to pay attention to, but which don't directly impact our business today in terms of actually transacting the credits that we generate. Everything is still happening in the VCM.
Okay, thank you very much. Kate, you also mentioned CORSIA as one of the compliance schemes. You said you are now approved under CORSIA. So there is no real incentive under the CORSIA scheme to go for the more expensive removal credits. So how do you go about it? How do you include that also in your narrative and in kind of your value?
Well, it's very new, so we're still working out how we, I guess, consider this part of our value. What I can say is that we've been receiving many questions from airlines who are considering buying carbon removal credits that want them to be eligible under CORSIA. And so it is unlocking huge amounts of demand for an entire industry that needs to be thinking about carbon removal. It is obviously you now need to think about the price point, which you kind of addressed, that it is more expensive, some of the pathways, but it looks like airlines have understood that this is going to be a requirement, so they're looking for what is high quality CDR and what is going to be I guess compliant under CORSIA.
Okay, thank you very much. Andrea, I mean, we talked about corresponding adjustment, and I know that COP is ongoing, right? And there are discussions around Article 6, right? Maybe we can zoom in there a little bit. So what is there to expect now after COP, right? And how does that influence the carbon market activities of corporates as the private, like representatives of the private sector, as opposed to host countries?
So yeah, COP is still ongoing. I was in Belém last week, so I had a glimpse into the action. I think Article 6 is not on the agenda at this COP, but this doesn't stop negotiators to try and negotiate a text. There have been some sessions, and there are draft texts floating around. I think because of what's on the agenda at this COP, we should not expect major changes to the international guidance, the UNFCCC guidance. I believe that is a good thing. We want rules to be stable, and we want governments and market participants to try run these rules, if I may, before negotiating further changes. And a review is already scheduled for 2028. So I do hope that until then we can have some regulatory stability. I think what will be important at this COP is the positive signals coming from governments outside the negotiating rooms. There have been a few coalitions and initiatives launched and supported by governments this year. And I think it is showing that after a few years of I can say difficulties for carbon markets, of transformation, I think now the work that has been done over the last few years is starting to be seen, and governments are recognizing carbon credits, especially for removals, as a tool that needs to be incentivized, that can provide, can contribute to climate targets, and we really seeing a more positive outlook coming from governments.
Thank you very much. I would now open a last round of questions to every one of you. And in the meanwhile, I would encourage everyone in the audience to ask your questions in the chat. I'm happy to moderate and select some of the questions. if there is enough time. But maybe, Kurt, over to you for my last question. So what is your general recommendation for buyers, and where do you see kind of a sweet spot for buyers to kind of in terms of time frame and kind of structure maybe when engaging in long-term offtakes? So what is the maximum impact you can achieve?
Yeah, so right now the sweet spot is really a 5 to 10 year offtake agreement that enables us to get the financing that is needed to really invest properly in the project, and also go through that entire issuance cycle. And we're very happy to be working with Isometric on like across a number of our projects on that process. And it's and so it's really, and I would add that buyers can be incredibly catalytic when they commit, because then it might mean, as we did with Google, that we can open up like an additional location, right? So it could be a new pyrolysis facility for biochar, or a new feedstock that we're sourcing from and growing. So these are, or maybe a new region if it is a agroforestry project where we're converting farms that are on staple crops over to higher value fruit and not through the farmer's income, right? So like really the impact can be quite large when we can move an existing model to a new region or to a new set of farmers. And when that commitment exists over 5 to 10 years, then it really makes the economics work out for a supplier like us, so we can really invest in that project. So that would be my short answer to that question.
Great, thank you very much. Kate, over to you. So you said, I mean, you mentioned already a couple of differences between Isometric and other standards, but what concretely are the levers that you apply to enable market growth while working with buyers and suppliers? So how do you pave the way for kind of a scaled removal market?
Yeah, we always talk about growing this market fast and responsibly, and we think that the key way of us achieving this is by restoring trust. And so we kind of break that down into a few pillars. The main one is scientific rigor. We have the largest science team, and that science team is really dedicated to making sure those protocols are rigorous, but also dedicated to playing a big part in complex verification processes. The second pillar will be radical transparency. We think that there has been a lack of transparency in this market, and we want anyone to be able to understand what feeds into our crediting decision, and they can deep dive into all of the underlying supporting evidence behind each credit that we issue. The third pillar is our aligned incentives. So Isometric has quite a different business model to a lot of the other registries. So typically registries are paid by the supplier per credit that they issue. And we believe that there is a big conflict of interest in this space, in this model. And so we've flipped it on its head, and we are 100% independent from suppliers. And we work for the buyers to ensure that each credit that we issue and that they get delivered into their registry account truly represents that 1 ton of CO2 removed. We've talked about speed and predictability, but that's obviously a main focus for us. And I think all of those factors feed into how we can scale this with trust and fast and responsibly. The final piece I'd say, like, given how registries work, we work with the suppliers, the buyers, the marketplaces. We're kind of in the middle of the ecosystem, and we're more than happy to help any of those new buyers understand, like connect the dots or understand some of the complications and try and help them, I guess, navigate this quite complex space. And, you know, we can help them work with marketplaces, etc. So we're dedicated to supporting responsible overall market growth.
Great, thank you very much. Andrea, so we heard a lot about speed now. Very important, of course, for project developers to kind of generate revenue quickly, right? And be able to kind of explore other project sites or just scale the operations. Also on the verification, we see that for host country, almost the opposite is true. I mean, it's like they are very, very slow, right? So what do we expect there in the coming markets? And do you think there will be a joint orchestrated effort to also kind of get host countries ready for carbon market implementation such that they can hold up also with the speed in which buyers require carbon credits?
Yeah, I think there has been a lot of frustration with the speed of some of the regulatory processes that are needed. I believe a lot of work has been done over the last few years. So we planted the seeds and we will start to see some of the results in the coming years. I think, well, governments will always tend to move slower than the private sector, than investors. But I think what we really need is one or two success stories, one or two countries that would really start to host a lot of high quality transformational projects, and then the other host countries will want to imitate that model, that success. Now I see a lot of risk aversion, a lot of caution. I think we need to unlock one or two front runners, and more will come. That's my hope.
Thank you very much. Looking at the chat, there is one you internally manage if you see a project isn't delivering. So what is your alert system, so to say, if a project developer isn't ready, or if you feel like, okay, the verification will not happen in time? Is there anything that you would do as a standard, or do you kind of keep your neutral position and say, okay, that's actually not up to us, we just then adjust the delivery timeline?
I think you are directing this question at me. Your internet wasn't great, so you broke up a little bit.
Sorry, no, Kate. Yeah, Kate, that was for you.
Okay, I think the question is, how are we forecasting delivery timelines, and what happens if there are delays? Yeah, we play a really proactive role in working closely with those suppliers to understand what are their timelines when we think verification can happen. There are, like, especially in the world of engineered CDR, there are regular delays. It turns out that removing CO2 is pretty difficult, especially for some of these nascent pathways. What we're doing is speeding up that verification process. So as soon as we are able to receive the PDD, we make sure we get VVBs on site, checking that everything is aligned. Once we receive the greenhouse gas data and the removal data, we are verifying that project as quickly as possible. And because we are paid by the supplier, we also take paid by the buyer, sorry. We take a proactive role in keeping those buyers up to date on delivery timelines. So our goal here is not to be a bottleneck. We obviously can't speed up when CO2 is removed, but as soon as suppliers are ready, we are very proactive and ready to engage with them, and can do that really, really quickly.
Thank you very much. Kurt, one question to you regarding buffers and replacement credits. You already hinted at that. What would be your recommendation for buyers when buffers you would see, and also how would you recommend buyers, what would you recommend in terms of kind of defining replacement credits already ahead of time, so to say? Is that necessary?
Yeah, absolutely. We do want to define those ahead of time in the contracts, right? So that is, I mean, the buffers. I think we normally think of buffers in terms of what is required by the registry, right, as a buffer against reversal risks. But when it comes to replacement credits, in case there's a shortfall in the primary credit type that's being contracted, we would add in basically what replacement credits can be included in that contract instead, or that just may be an ongoing conversation with the buyer, as if and when those issues arise. Then we've also had cases where then we make those adjustments depending on what's available at the time and what also meets their portfolios. So the advantage is we have different pathways that we're able to draw from with different durabilities and different price points. So that helps us also create some of the flexibility around structuring it if we want to do it in the contract.
Thank you very much. Andrea, how do you work together with standards? I know that some of the standards are also part of IETA. Do you also kind of consult with standards in terms of how our registries, how to kind of bring that market forward? And here again, a bit looking at speed and scientific rigor. We heard it from Kate. So what is the interaction that you usually have also on not only on the policy front, but also on the delivery kind of front?
I think the role of IETA in this is to be a forum where all types of market participants get together and they can have relevant discussion in formal or informal settings. And it's definitely our objective to move the carbon market forward and ensure that not only government policies are right, but also the rules of standards registries are facilitative. They deliver speed, but also sufficient credit quality and market integrity.
Thank you very much. All right, so we are almost at the end. I would give every one of you one last final statement before we close the session. I can already say thanks so much for this interesting conversation and for taking the time. Kurt, if I may start with you, one final statement before we close this webinar.
One final statement, maybe the perspective that I haven't offered yet is just that the buyers of long-term offtakes today are also bringing a level of interest and rigor to the carbon markets that we really appreciate as a supplier, right? So that's those are the buyers that we as a supplier really want to be forming relationships with right now. We want to be going through these incredibly deep diligence processes so that they really get to understand our projects and we really come to understand their requirements, right? Around certainty of carbon quantification, around co-benefits, around FPIC, all sorts of things that buyers really care about. And that level of investment is really what moves these projects along and helps develop the market in general, right? So there's a very high correlation with kind of quality here that we're very eager for.
I think we lost Kurt. Kate, can you hear me still? Hear me still?
I can hear you still, yeah.
I think I will hand over to you, Kate, looking at the time.
I'll keep it really brief. The purpose of this webinar was to talk about long-term offtakes, and they're absolutely fundamental for this market to scale. So we need buyers to understand how they work and to be able to feel comfortable with long-term offtakes. I also think that we always talk about risks, and yes, there are risks, but ultimately, like, the financial risk is not huge. Most of the long-term offtakes that the buyers are paying when they receive credits, if the registry does their job and the marketplaces do their job, we hopefully are removing a lot of these fundamental risks for them. Final statement is we need buyers to be thinking about this, and I'm more than happy, and I'm sure many of the people on this call are happy to help educate people get comfortable with those risks.
Andrea.
Yeah, it's a market that needs to be scaled, and talking from a policy point of view, there are a lot of decisions to get right. So my final statement would be to work as a team, as an industry, try to make sure that carbon credits and carbon markets are seen as a key instrument, a key policy instrument by as many countries as possible, and trying to avoid internal divisions between avoidance credits, reduction credits, durable, less durable removals. I think the real challenge is to make sure these types of instruments are front and center in the agenda and the incentives are right.
Absolutely. So we are at time. Thanks very much. I think much has been said. I think it is absolutely vital to scale that market. And as you said, to kind of build and continue trust in the market. And I think buyers who are engaging in long-term offtakes really play their part. And it is really important that they can trust in the partners they are working with. So thanks very much for kind of providing your perspective and also positioning as partners to contribute to that overall goal. It was a pleasure talking to you, and yeah, have a wonderful rest of the evening. All of the questions we couldn't answer now, feel free to reach out, and we are happy to answer them then in a direct message. Thanks a lot.
Thank you for having us.
Thank you.
Bye.
Thank you. Bye.